Good afternoon, everyone. My name is Andrew Barber from Targa Communications in the UK, and I want to welcome everyone to this Targa Communications and REFIRE Investing in Germany online roundtable regarding logistics and light industrial real estate. This is an important asset class for many investors, and today, because of the global nature of logistics, we are not just looking at the opportunities within Germany, but also considering the pan-European market and the possibilities available to investors. To explore these opportunities and to examine the changing market and the impact of COVID, we have assembled a panel of experts for you today who will be looking at the biggest challenges to the sector and looking at where the growth opportunities are to be found. To set the scene, we also have a short presentation concerning the structure of the German logistics market, how external influences might impact the rebound in the industrial and consumer climate as we emerge from the pandemic, and Germany's position within the pan-European market. To provide us with this overview of the market, we are joined today by 𝘀𝗽𝗲𝗹𝗶, Senior Director, Head of Asset Management, Germany, Austria, the Netherlands at Invesco Real Estate. As I mentioned, Christian's presentation, which will take about 5 minutes, will examine the current situation within this market. Following this overview, we will begin our panel discussion, and we are today joined by 𝗀𝗽𝗲𝗹𝗶𝗀, Managing Director of Barber Industrial Real Estate, one of the leading real estate specialists in the logistics and light industrial sector. Our second guest is Björn Kumbacher, who is Head of Investor Relations for Engel & Völker's Asset Management at the Hamburg office of this international investment consultant. Our final panellist today is Theo Sutters, who is Managing Director and Head of Fund Management at Edmund de Rothschild Real Estate Investment Management, the real estate investment management business within the Edmund de Rothschild Group, the financial institution specialising in private banking and asset management. Today's panel will once again be expertly moderated by Charles Kingston, who is the publisher and managing editor of REFIRE magazine, which is recognised as the leading source of information on German real estate finance in the English language for institutional and international investors. I would like to extend a warm welcome to our panellists and speakers. So to get us started, I would now like to hand over to 𝘀𝗽𝗲𝗹𝗶 of Invesco Real Estate to provide us with a brief overview of the logistics real estate market in Germany.
Thank you very much for the introduction and the opportunity to say a few words, present some highlights and key figures about the logistic markets before we start this interesting panel discussion. Yes, Invesco Real Estate, just a brief word because I only have 5 minutes, a little bit like speed dating, unfortunately, so really not enough time to show a lot of things, but I think Invesco Real Estate briefly mentioned an international asset manager, one of the 6 leading independent asset managers worldwide with roughly 70 billion under management, founded in 1980. Sorry, can't see the screen. So 1983, expanding then into other markets. We entered into Europe in 1996, into Germany in 2003. So we are present in 16 countries with around 600 employees worldwide. Our portfolio, which we manage in Europe, is around 13 billion of total value. You can see the countries where we are invested in. The strongest countries are Germany, France, and the UK. It's quite a big diversification. So we are not only a logistics investor and asset manager for institutional clients. We also invest in other asset classes very successfully, like hotel, office, retail, and so on. The office and industrial allocation is around 16%, amounting to roughly 2 billion across Europe. So we are a cross-border specialist with a lot of different asset classes. So let's come to the logistic markets briefly and show you some interesting graphs and highlights about the last years, especially, of course, I think it's interesting to understand what happened since March last year, where the first lockdown started in Germany and also in other countries. You can see here in these really interesting graphs that there has been a phenomenal rebound in the industrial and consumer climate. There is a dip in beginning of 2020, the first quarter of 2020. But as you can see, the logistics activity has remained very active, very volatile at the beginning of 2020. But in general, the logistics sector did more benefit than suffer by the recent crisis. If we're looking into the European context and the importance and differences of the logistics markets, there is, of course, a big difference in maturity between the different regions. As you can see on this slide, Germany is one of the biggest markets, followed by France, UK, and the Netherlands, which are really the traditional key regions over the last, we'll say, 15 to 20 years. But what you also can see, and which is really interesting in this graph, is the very, very low vacancy rates we can see in many of these markets, especially in the ones which are very mature and very traditional, which is, I would say, in average around 2 to 5%, depending on the local market. And in the same context, of course, there has been, and there was no difference in the year 2020 compared to the previous years, and 2021 is even stronger. So the activity on the logistics sector in Germany, but also in the Benelux states, is even higher. It has increased over the last 2 years even more, which of course is a result of the crisis resilience of this sector, of the e-commerce, of the online sector, and so on. So it's really interesting to see that in 2021, first half, for example, we have seen the biggest take-up number ever over the last 10 years, which is a clear sign that the logistics sector is definitely one of the, if you can say, winners of this crisis. Accordingly, the vacancy rates are really low. Some characteristics about the German logistic markets. I think the polycentric structure is something which is really interesting and really special, maybe for Germany, especially. Other markets maybe a little bit similar, but Germany, I think it's a very, very individual distribution of these multiple logistic regions, the traditional ones, which are the champions, the port areas, the Rhine-Ruhr area, of course, the Rhine-Main area. And then we have also, of course, the industrial hubs in southern Germany, including the automotive sector, and which are around Baden-Württemberg and Bavaria located. So there are different areas and centers of importance. We have seen, I think we'll hear this later maybe, that these traditional regions are a little bit softened in the nearer past, or will be softened also in the near future, because there is just such a scarcity of logistic land available. So it is more and more, there is more and more trend to develop into more less traditional regions, but in principle we still have this polycentric structure in Germany. What we also have seen over the last years was an increase in the investment activity as a whole, which is, I would say, mainly a consequence of the attractiveness of the market, of the perception that it's a low-risk market, low-risk asset class. This can be discussed, I think. It's not always low risk, but it seems like international institutional investors have been investing a lot over the last 3 to 5 years. But what we also see, and that's very interesting in this graph, is that we have much more forward funding deals happening over the last 3 years, which of course is a result of the yield compression which we have seen, which is really extreme, almost close to the office yields. We are now dealing the core assets in this asset class. So there is a need for institutional investors to step in at the earlier phase of the development to somehow keep the expected performance for the tenants. This is something which is really interesting, but also dangerous. Of course, there is a lot of expertise necessary to deal with forward funding. The setup, the layout of the assets is really something which is very important to decide on and to be successful as an investor in this market. Last but not least, the exit yields reflecting what I have said before. The exit yields went down. The yield compression was extreme in the last years, especially in Germany. We are very close to office yields with core assets, of course, core logistic assets, but also in the other countries, the yields we are seeing now compared to 5 years ago are really extremely compressed, and I think that's something which will continue. It's a continuous development which we will see also over the next 5 to 10 years, because this asset class is, as we have seen, a resilient asset class, a robust asset class, still a low risk asset class, with business area e-commerce, which has still a big future to see. Right. So last but not least, because my 5 minutes are more or less over, I think the secret sauce in our point of view for successful development, also with investment, and we can deliver this, is having an asset manager who is into the market, who has experience with different phases of logistics cycles. So not only standing asset investment, but also a development of logistic assets. Secret sauce would also consist of understanding the tenants, the business of the tenants, and the future market trends, of course, because in this case, you will have a sustainable relating experience. Of course, experience with local authorities is something which is very, very important. Planning departments in conjunction with the creation of planning rights, speculative development versus long-term investment. These are all topics which are really important for a successful logistic investment, and Invesco as a long-term partner for institutional investors can deliver all these components. So thank you very much. I think I'm done with my time.
Thank you, Christian. That was a very excellent introduction to today's panel discussion. So, Charles, over to you.
Thank you very much indeed, Andrew, and thank you very much to Christian. That was a very good and very solid opening introduction, which touches on a lot of the themes which we'd like to discuss this afternoon. Just very briefly to myself, I'm Charles Kingston. I'm the editor-in-chief and the publisher of REFIRE. We publish in English language for the last 15 years on the German real estate market. And of course, in that time, logistics has grown from being I would say, minority interest to be very much at the heart of global interest in Europe and in investing in real estate, particularly as we've seen over the last number of years. Just a couple of very quick takeaways there from Christian's impulse introduction there that struck me. First of all, and I'm glad, therefore, that we've got people on the panel this afternoon who are very expert on this, a huge importance of logistics in both the Netherlands and Germany. In particular, the increase in activity in Germany over the past 5 to 6 years. And with these two countries, the Netherlands and Germany, having the highest, as one of the charts there showed, the highest logistics stock per inhabitant. And of course, the standout key message is the yield compression across all of Europe, but with Germany leading the field with the lowest prime yield now of all the markets. In some cases, I think we're going to hear that this afternoon, down to 3% and even cracking the 3% mark, which is quite an astonishing development over the years. Before we get into this discussion, I'd like to also welcome our three speakers this afternoon. And before we start on a general discussion, perhaps I'd like to invite you all just for about 60 seconds to tell our audience exactly what you do, and after that we can start discussing. Perhaps I might start with you, 𝗀𝗻𝗋𝗋. If you could just briefly describe your position.
Yeah, sure. Thank you. Yeah, 𝗀𝗻𝗋𝗋𝗋, I'm the managing director of 𝗀𝗽𝗲𝗹 Industrial Real Estate. We are still probably better known as a developer with a development pipeline of currently some 1.4 billion euros in Germany, but as well as now in the neighboring countries, some 8 countries in total, with some 6.4 billion in assets under management, mainly core plus value add, but also core logistics, lion's share in Germany as well, but neighboring countries. What usually makes me personally different from other speakers in these, on these panels, is that I'm actually from the logistics industry and can still say that I spent more years in logistics, contract logistics, also e-commerce, than in real estate. I joined the company some 12 years ago, so I still remember my time in logistics.
Very good. Theo, perhaps you would just briefly introduce yourself.
Yes, thank you, Charles. Good afternoon, everybody. So I'm 𝗀𝗲𝗹𝗶, based in Amsterdam. I'm working for Edmund Rothschild Real Estate Investment Management, which is the real estate investment management arm of 𝗀𝗲𝗸𝗀𝗀𝗍. We are also doing other asset classes, private equity, bonds, liquid assets, etc. I'm responsible for fund management across the countries, and 𝗀𝗲𝗸𝗀𝗀𝗍 is in particular focusing on what we call our convictions. We're a conviction-driven investment house. We're not trying to do everything for everybody, but focus on a couple of things, and industrial and logistics has been a very important part of that. Apart from that, we're doing offices in core locations, so in the big cities in Europe, as well as residential in specific countries. So that's the main focus of the company, and in particular, I'm responsible for our European Industrial Fund.
Excellent, Theo. Thank you very much. Björn.
Thank you. Good afternoon. Yes, I am Björn 𝗀𝗃𝗲𝗹. I'm responsible, the head of investor relations for the 𝗀𝗲𝗃𝗲𝗃 Asset Management, a very young company. Exists almost 1 year right now. What is our focus? Yes, you know, 𝗀𝗲𝗃𝗲𝗃𝗃, we are very famous for residential. That's why we decided to have a first fund with residential focus. But we also see the chances to invest in trend and other opportunities, and that's why I'm here today, because we decided to use the network of 𝗀𝗲𝗃𝗃𝗃 and to see the trends and to speak today about our new chances in the market, logistics. And I'm very happy to discuss it with the other panelists today, because I think it is very exciting and a very cool topic to discuss today. Thank you very much.
Great. So we've got a broad geographic coverage here on the panel this afternoon. Now, one of the things that we have seen is this huge rise in new interest in logistics. There's undoubtedly been a shift, or there's already a shift going on between from investors in other asset categories. And I'm amazed that a year later, I think this is in fact our second panel discussion within the pandemic. So here we still are a year on. There's obviously been some effects. But if I could, Jan-Dietrich, could I ask you to just highlight some of the big challenges facing the logistics and the light industrial sector at the moment, with all this new interest in the sector and a shift essentially in the focus of the category within real estate?
Well, yeah, the challenges, obviously, it's getting harder and harder for the logistics industry or real estate industry to obtain suitable plots. The average logistics shed grows bigger and bigger, but the plots become smaller and smaller. At least in those areas, we in Germany call it the top 7. They are in short supply, even though brownfield developments are quite frequent in Germany, with dying steel and the automobile industry, or partly recession in the automobile industry. There are certain potentials, but on the whole, this is getting more difficult. This is why, like Mr. Freund explained, Germany is so sprinkled with logistics hotspots, where in other countries we have few concentrations. And this is something we can still see as a trend. There are no real hotspots anymore. There are hotspots, yes, but they are popping up new hotspots all of the time. They keep popping up. The Magdeburg market and others. This is fairly different from the surrounding European countries. A chance as well as a challenge. But we also see that the ESG legislation now going into effect is obviously something impacting on logistics developments quite a bit, because they are not naturally born ecologist dreams. So that's something where we have to modified certain mechanics which used to be in place in part. The developers being a bit channeled by the logistics companies who were looking for the cheapest rent and not for the most sustainable real estate. But this is now changing. It's slowly changing, but it's changing. And obviously, this ESG legislation is affecting funds, also like ours, quite a bit, and afford quite a bit of effort in the future.
We'll get on to that, I think, later on in the discussion. Theo, what do you see as the biggest challenges in your segment, in your industry, looking at logistics? What do you see as the key challenges? Would they overlap very much with what we've just heard?
Yeah, it very much overlaps with what we just heard, and it probably also is different per country. But in general, there is more competition for good assets. I'm looking at it as an investor, not so much as a developer. And in that respect, competition for good assets is obviously bigger, but we're focusing on smaller and medium-sized buildings closer to where the population centers are, the big cities, urban areas. As we're trying to source off market mainly, we're still finding a good product in those markets, although it is becoming more difficult. So definitely the search for good product, for good assets is our main challenge.
Great. And Björn, what about Spain? How easy is it there? What's your prime concern about accessing the market in Spain?
Yes, we heard a lot from the other panelists, and I can agree with them both, because it is also hard in Spain. Yes, but you have a little bit another situation there, because, for example, I give you an example: the e-commerce. It is one of the most strongest impact on the logistic market. We see, for example, that there's also a chance, because if you compare it with the other European countries, you see, for example, that there's not so much e-commerce used by the people there than, for example, UK or Germany. That means for me that there's another chance that there will be another possibility in the future. But I agree with the panelists; it's hard to find the right opportunities, and I have the same look. Theo, I'm looking from the investor side, and there's enough money in the market. It's not the problem to have enough money, but to find the right area, the right assets. There's really a fight to get the best opportunities. And if you look in the future, for example, you have to find a good asset which you can use also not today, maybe in 5, 10, or 15 years. And there maybe we discuss about the ESG topics as well. And that makes it very hard for us to find a good asset class.
Okay.
Yes.
Well, just looking, for example, at you span many markets, but as a Dutchman, you can probably compare, for example, the Dutch market with the German market. Where would you see, are there fundamental differences there between the two markets in terms of structure?
Well, that probably there are a couple of angles to look at it, but first of all, as an investor, it's easier in the Netherlands to find off-market transactions because it's easier to approach owners of buildings by checking public registers, for example, which is not possible in some other countries. So in other countries, you have to go through the brokers very often, which makes it a bit more difficult because then many other people are there. I would say that if you look at supply and demand, obviously in the Netherlands we don't have a lot of room, in particular in the Randstad. So we tend to be very careful with how we spend the land and what we build on it. It's probably a bit easier as long as you stay within the zoning to transform buildings into another use relative to countries like Germany and France. So that's also a difference. So we find it a bit easier to find good product in the Netherlands than in France and in Germany. But on the other hand, the markets in Germany and France are much bigger than the Netherlands. So that means that we still find what we need.
Yeah, indeed. I saw you nodding sympathetically there when you heard that about access to the markets, direct access to the markets. Would you agree?
Yes, absolutely. Having said that, luckily we had a transaction volume last year of some 1.4 million in logistics only, which sort of placed us in a position where we are actively contacted then also for off-market transactions, which gave us ample opportunity to invest the money at pretty high speed and start then new funds. But that's certainly something which is getting more difficult in future. But also it's depending a bit on the product you're looking for. The competition for core product is extremely fierce, driving down gross initial yield further and further. There's still a gap, and this is why we specialized in core plus and value add, where you also can, over time, implement, manage the ESG process and add value to what you invested in, and this is still then a pretty nice performance in the end. A little bit outside of this rat race in core.
Well, how do you avoid this rat race? I mean, presumably you have a strategy when you focus in on an asset or a portfolio that meets your criteria. You end up competing with a lot of others for the same assets, or you presumably try to not avoid competing with a lot of others. How do you do this? And does this vary from market to market? For example, people say in Germany, it's becoming increasingly difficult to avoid brokers to access some of the prime assets. I mean, this question is for all three of you, really. Theo.
Yeah, it's a good question, but obviously, it all starts with having boots on the ground and local teams who are well informed and present in the market. Not only real estate specialists, but also specialists in industrial real estate. So that's essential. And once you're there and you have the experience, and Mr. Hempel already said it, then you got also approached by people. And we are trying to focus on, let's say, what we call the less obvious buildings, so smaller and medium-sized warehouses, not necessarily beautiful looking, because it needs to be functional for the user. That's the most important thing. And for example, last mile is now a very popular word. It's a bit a buzzword, but what is important is that the building is very flexible. I agree with Björn, what he said about it before. A flexible building, that's what counts. And ESG-wise, probably going forward, that's also the most sustainable, because then it can be used by different types of users. Technology is also changing. So, warehouses with a lot of technology in it, which is difficult to remove or to change. Exactly. The question is, the jury is still out whether that's sustainable or not. So flexibility is a key word for us.
Yeah, and an own development pipeline as well. I mean, with 30 plus developments in parallel, 1.4 billion, you have also then, if you have a development pipeline, access to top product. This is something where we, especially with a product everybody wants, are pretty well organized and lucky, developing quite a bit of square meters for the leading e-commerce providers. This is a product everybody wants currently. So
you're fortunate to be in a position to be a developer as well as a Bestandshalter. But in the case of Björn and Theo, you do not do speculative or even against contract development. Is that right?
No. I give you an example. EV is not only 𝗀𝗲𝗹𝗃 and asset management in Germany. You know that we have, for example, the EV development in Spain. Yes, and that means for us and for you that we have the access in an early stadium. Yes, and because we have the local team and we see off-market deals before others will see it, and we have a development team there in Spain, it will helps enough, much for us.
Okay. Theo?
Yeah, you're right. We're not doing developments, off-the-ground developments for the time being, so we can do forward fundings, take the leasing risk, but permitting risk and development risk is currently what we try to avoid. But we have acquired a couple of assets on which the business plan actually is that at maturity of the lease, we plan to reconstruct a completely new building on the site. We've done that in Utrecht, where we have bought 3 adjacent assets on the business park 𝗀𝗲𝗹𝗀, north of Utrecht. And in Germany, we've also bought an asset which potentially is good for a redevelopment once the tenant would leave the premises. So then at that point of time, we would take the development risk ourselves.
Okay, well, what that does is in a way it adds to the transaction volume, which is what we're seeing is rising, but not necessarily not at the same rate as the demand for assets. Again, 𝗀𝗽𝗲𝗹, this question there seems to be an inherent tension between the demand, the desire of logistics investors to be as close as possible to the big conurbations, and at the same time there is, I think, a growing tension between the communities and the local political scene to in a way discourage people from coming all that close. And there's resistance, of course, from both local retailers and maybe local residents. How do you square those two up?
Well, there is a growing resistance. But this is, not specifically if it's an e-commerce project that is true for logistics projects as a whole. Yes. And obviously, we have to. Well, we sometimes look at the Netherlands and envy them a little bit, for the beautiful logistics building they've been building there for a number of years already, which are probably more acceptable to the immediate environment than the simple stuff that we see in Germany. But the key thing is, I think, that we spend as developers more and more money in upgrading infrastructure around the building or the premises themselves. So investing in public infrastructure, like crossings, like whatever, or even cycling lanes and this kind of stuff, not as a bribe to the community, but in order to make the one thing better, which actually then is a real discussion point, the traffic created by the logistics facility, and that often works. But as well, you need to sell it better to the local community. And if it's a building offering with a tenant offering a number of good paying jobs, and if it's explainable that the building itself is ecologically reasonable in the materials you use, recycling stuff and so on, you still can convince local communities. You'll never convince the direct neighbors. That's something you mustn't even try. That's the NIMBY phenomenon, which is
NIMBY, not in my backyard.
Yeah, also true in Germany, as it's true in other countries. But what people do not understand, and if the pandemic had any positive impact, then certainly, at least here in Germany, I think so, in other European countries to some extent too, it served to highlight the value of working logistic systems. This will not last long in terms of memory, in terms of fame, but that was at least a little booster for the logistics industry. But the NIMBY effect, we have to battle each and every time.
Yes.
That's what we have to put up with.
And Björn, do you find that is strong in Spain also?
Yes.
Not in my backyard. Yes, development, but not right here.
Yeah. You have the same thing. The permission thing is one thing. You have the direct neighbors. You have there maybe the problem with the challenging problems that they maybe can build there some flats, for example. But on the other side, Spain has no strong economy. They would like to work in this kind of area, and they need it. Yes, it's the same like the other both has spoken before. You need the industry, you need the logistic to have more for the local communities to give them a chance to work there, for example, and then you have to deal with the local politics, and that's why for us it is very useful to have a local team there, because it is very hard for us to do all these topics from Hamburg. With the local Spanish government, for example, that means you have to find a good way to see international or European view, or have a European view, but you have to find some locals there to fight or to take the challenges and to see the chances, or to bring the chances to the local government. Yes, that's to get the permissions. Yeah.
Okay.
To some extent, the urban logistics problems all the major cities have also served to start the discussion within communities how to go about, logistics, new logistics facilities within city limits, because their traffic problems became bigger and bigger.
Yes.
And there are solutions to ease them by using bicycles and other, lighter vehicles. But the prerequisite of using them is to have smaller hubs within the city limits.
Yeah.
And this is then, intentionally building permissions to new micro or whatever hubs. The prerequisite to doing that is the realization that logistics is a necessary function for a working community, and that's nice PR for the logistics industry as a whole. Will take some time until this filters through to the rest of the country, but still, that's a hopeful sign.
And this refers back to what you said earlier on about exploiting brownfield sites more than greenfield sites, which are the subject of a lot more resistance, presumably.
They are great in a number of ways. First of all, if you use a greenfield site, obviously it's a greater damage to an environment than a brownfield site. And also, if you look at a brownfield site, we developed some 450,000 square meters a couple of years ago in Dortmund, 𝗀𝗲𝗃𝗃. It was former steel mill. And as you can imagine, 100 years plus history of steel mill. So back then, they built the workers' housings and so on pretty close to the steel mill. And by 100 years later, the city of Dortmund grew around the steel mill. So it's basically well within the city limits. And it's so integrated in the infrastructure and stuff that you don't need to put an extra mobility program on or something. And also, if a steel mill goes with all the emissions and noise and whatever, logistics is a big win in comparison. So that's also good news.
It must be. And 𝗀𝗲, you must come across this quite frequently as well, that there's certain assets are considerably less controversial, or there's much less resistance surrounding them if they fit in within a city's existing expansion strategy.
Yes, I totally agree. And that's in general the biggest challenge of the real estate sector, to improve or renew, renovate, transform the existing stock, instead of only buying new stock, building new stock. So I think the same applies to logistics, in particular close to urban areas. That's also for us an important point, to get exposure to brownfield type of locations where you have older assets where tenants might want to leave at the end of the lease, and then try to erect something which is more adapted to today's needs.
Charles, could I just?
Please, Andrew. Yeah.
Someone's pointed out on the Q&A that not long ago you could hear that last mile logistics and urban logistics would never achieve institutional investment quality because the size of the assets was simply not big enough. And the question is that still true after 18 months of COVID and the increased online sales?
Good question. Please, again, to all of you. What has changed
what is urban logistics? If you think of micro hubs, then this is maybe 5% of a former shopping mall or something. So this is not an extra building or investment in itself. If you look at the last mile hubs of the large e-commerce service providers, they may be smaller than a standard shed of some 50,000 square meter, but at least in urban areas, the value of the plot is quite high. And even if they are only 10 million, if you bundle them, it makes sense. If you bring down transaction costs by having a transaction with 4 or 5 or even more of these, it makes sense. And the value of the plots is quite incredible because it's going to only grow over time, because the true value does not lie in the building on the plot, but in the permission to run that many trucks there. That's the point. If once you got the permission to run such a place, that's the true value of the plot and of the investment.
That's also a question where we mentioned all together, there's enough money in the market. You have to find the right asset. And yes, I think we will see it in the next months, in the next couple of years, that this special asset class will be more interested for institutional investors, because you have not another chance. And that's what you said before. If it is all in the question, if it is very interesting to invest in because you have the permissions, you can run it and to see it as a system. You have the last mile logistics and you have the chance to have a hub within the city. It makes fully sense to combine it, for example. Yes.
And to get back to Andrew's question, has this changed? Has this noticeably changed in the last 18 months? Theo, would you see a sort of softening up of attitudes towards this in the last since we've seen the importance of supply chain delivery and people screaming about getting all their toilet paper delivered and empty warehouses and so on? Would you see much change over the last couple of years?
Yes, well, I think it is definitely becoming an institutional asset class in itself. Also, smaller and medium-sized buildings, whereas 2 years ago people might not have looked at it. That's not only a question of return or availability. I think it's also, let's say, a trend in society, e-commerce, last mile delivery, structural changes in the supply chain that nobody can ignore. And the question, I think, in the next years, the question is also coming up what actually the difference is between retail and logistics and industrial. And to give an example, if 5%, as Mr. Hempel said, if 5% of a suburban shopping center is now allocated to self-storage, for example, people pick up their the things they've ordered in the stores that are in the shopping center, or their groceries, with the keyless entry, etc. Is this self-storage space? Is it retail space? Is it industrial space? Is it last mile logistics? That's a big question. So the granularity of the type of distribution facilities will only increase in the next years, and I think that's a very interesting market, and probably investors are starting to recognize that.
Yeah.
We've also had a question, Charles, from 𝗀𝗲𝗹𝗲 on this sort of topic about logistics-led mixed-use developments. Is there a future for them to try and soften the impact on local communities and offering other uses such as retail or even residential mixed with logistics, as we've seen in the UK? And he asks about the potential for multi-level logistics in urban areas.
Hi, Tristan. Multi-level. Multi-level is a fact, even though we do not see in Central Europe, at least, that many multi-level.
Can we just define this for a second, Jan-Dietrich? This question relates to extracting more value per square meter, I guess. That's what this is about, Andrew, right?
Yeah, there's been some examples of multi-level distribution units elsewhere in the world. I think
vertical investment. Yeah. Okay, Jan-Dietrich, please.
We'll see more of that, but there's a difference. If we look at buildings like we had the pleasure to develop for Amazon in 𝗀𝗲𝗹 near Bremen lately. It's a 3-level e-commerce distribution building, pick and pack operations. That's a complex building because there are many people working in there. But it's at the same time an easy one to build because you don't need to put much weight on the second and third level.
Yes.
And if you do the same thing, putting one layer on the other with conventional logistics, so to speak, so contract logistics, like one company, competitor of ours, is about to finish here in Hamburg, but there isn't a tenant yet, as far as I know. This is a far more cumbersome thing to do if you want to have 6 tons or even only 5 or 4 tons in the upper stories. It creates very dense wood of pillars below. Yeah. And if you go up with full loaded trucks, 40 tons or whatever, this creates a whole lot of effects, slows down all the processes, makes the building incredibly expensive as well. So remains to be seen. We don't have the big pressure like some Asian spots, like Hong Kong or Singapore, where
and Korea and so on. Yes,
have this for decades already.
Yes,
but when back then in logistics, when I was strolling through 1 or 2 of these buildings, you couldn't do what they are doing there to human beings here, at least not in Germany, and I'm certainly not in France and other countries. So this is also construction issues there, which makes these buildings more expensive here than they are there. But it will come, but it will also take some additional engineering effort. We are trying to develop for plots within city limits a 𝗀𝗲𝗹𝗃, logistics in the basement, and to make logistics more acceptable to the local community. Put some light industrial on top, 1 or 2 layers, and sort of place the office space all of these guys need, on the walls to make it look like an office building and not like logistics. Let's see where these experiments go, but we'll definitely see more multi-story in Europe as well, but not everywhere, only in key spots, and e-commerce is leading the way. Conventional logistics is still a construction and cost problem.
Yeah. And Theo, when you do some of your minor redevelopments on the same, or when you do your redevelopments on the same sites, which you take over, are you introducing innovations like this as well to some of these state-of-the-art logistical techniques to double the productivity or to increase the productivity of the asset?
Yes, we will certainly do that. For the time being, that's not on the table yet. We have a couple of assets who have redevelopment potential, but the leases are still running for 4 or 5 years.
Okay.
I think in general, an investor with long-term money, or at least with a long-term investment horizon, can be good, serious competition for developers, because actually you have the possibilities to buy an existing building, to just make sure that you collect the rents, that the tenant is happy, and once the market is ready to redevelop something, and not necessarily right now. So we're very much looking at brownfields. We like that, and buildings are not always looking beautiful, but sometimes I say ugly buildings perform well financially.
Right.
And they are also ecological correct and ESG-wise correct.
Yeah.
Because every existing facility you find is closely knit into the local social and infrastructural systems. Building new buildings is the biggest emission you can have.
Yeah.
And our research made a little exercise calculating this, and we compared typical aging shed, some 30, 40 years old, to a modern one in terms of ongoing energy consumption emission. Obviously, the new development is better off, but it takes at least 9 years, we calculated, that this additional emission of the old shed sorts of is an spoils the overall calculation, and it's outperformed by the new shed if we take into consideration the new emission you create when building the new shed. And if you just very carefully pimp the old shed, you can extend this point where it's overtaken by the new one up to 2 decades. And that's quite a big, I think, ESG argument pro.
Exactly. I want to ask you all about this because of course ESG is the one big question that nobody can avoid anymore, and you must, as fund managers, all of you must be under a certain amount of pressure from your investors to do exactly something like that. For example, if they want to introduce green leases, for example, and some of your tenants are not particularly willing to do so, this all causes problems, presumably, and you want to meet the needs of your investors, but with older buildings, you could be stuck for quite a while, right? Theo, what do you come up against this?
Yeah, well, you know that it's not always a situation of somebody winning and somebody losing. I think tenants start also to realize that it is important for them too, and not only for the landlords or its investors if you have a fund. So in that respect, it's all also about communication. And for offices, it might work differently as for industrial. But in general, we find a good sounding board with tenants if we start talking to them. And obviously, profit is important. So a low rent is important. But we also need to recognize that in the landscape of, let's say, smaller and medium-sized buildings, you also find yourself with the same type of enterprises, or small and medium-sized enterprises, who, very often have a long-standing track record, who have a good and profitable business. Their building is actually their primary working tool. They're very loyal in paying the rent. I think rent collection in the sector has been quite good over the pandemic. So that means that the building for the tenant is pretty important. The location is very important, because if it's closer to cities, there's not much availability, so not much possibility to move. And for, let's say, bigger international companies like Amazon.com and the likes, it's all a financial equation you have to strike. So we find quite a good sounding board with tenants, and obviously, it's a process you have to go into, and the way to Rome also has not been built in one day, so you need to work on it.
Yeah,
depends on what kind of tenant you have. So the big blue chips have an own interest in becoming ESG
compliant. Yes.
And drive the process, and that's an easy sort of interaction with them. The most profitable facilities we have are multi-tenant ones. And there you have second line service providers, smaller companies, and so on. they are not quite as easy to deal with. But having said that, in most of those buildings, there are quick wins as well. Photovoltaic devices on the roof. We created an extra business division for that because it's a big potential to actually earn some money rather than having to spend money to solve a problem. And also LED lighting, for example, wherever it's not there, most of the tenants, at least those who have a longer tendency to go through, are quite keen on getting that and offer something in return, whether it's a higher rent or than the longer rent period or whatever. So that's not that much of a problem. If you come around the corner and want to have true ESG management and want to implement a green lease, in Germany for new developments, it's fairly easy to do because if you are the developer sitting on the plot, then you're basically the one in power right now. So this has changed a bit. You can do that. But if you approach a tenant who is sitting in a facility and still got some 4 years to go,
left on the
he will
lease,
look at you and say, I'm supposed to make myself more transparent to you as a landlord to make you better off. It goes even down to the detail of, what are you doing with your garbage, and this sort of thing. Why should I do that? And this is then a discussion and a negotiation which is more complicated. It's not impossible to implement a green lease there. It's possible, but for the asset manager, it's quite a workload.
Can you testify on the Spanish market?
Yes, it's a special situation. I think we need a little bit longer. It depends on who are the tenants. They are multi-tenants. It's one of the bigger one. But yes, we have to speak with the tenants. We have to speak with them, and for us, I am responsible for the investors. The pressure comes from my side from the investors directly to the tenants, and we have to find a way. But what was very crazy to see was the impact ESG has or the market was driven by in the last 6 or 8 months. What was happened with the ESG topic? If you asked me 2 years or 1.5 years before, and I would never expect that the impact is so heavy. Yes, and you see right now there are new standards. They are new, and you can't avoid it's this topic. You need to discuss with your tenants about it. You need to see exactly who are your tenants and what he can do. Yes, on both sides, on what the building can provide, but what can the tenant do for it? And I think we will see a lot of change in the next months. But I need it to sell my product. And indeed, for all of us, I think it's a good way if we all speak more about ESG.
Well, yes. Most CEOs are telling me that they're spending anywhere between 30 and 35, 40% of their time on ESG-related issues at the moment. So This is not something that's going to disappear overnight. It's going to be part and parcel of all investment and so on. Andrew, other questions coming in there from the audience?
We had a question earlier on. It actually goes back to Christian's presentation at the start. And the question is, in your opinion, how much of the yield compression is to do with the general attractiveness of the sector? How much is due to the load of equity chasing real estate? And how much is down to expected rental growth?
Well, let's just distill that question down to the wall of money that is looking to access the logistics market is coming from presumably fresh capital, but also being shifted from other asset categories. So, Jan-Dietrich, how much of that is having the effect of compressing the yield in logistics?
Well, I think we will see some further yield compression. Obviously, due to other asset classes being less attractive, but also I think the yield compression would happen to quite some extent, even if hotel or whatever would be less attractive right now, because it's now on the agenda. And the majority of the investors, I would like to believe, now understood. I think in the US it was an accepted asset class decades ago.
Yeah.
But this is part of the overall spread you should have in your portfolio. So I think, well, yeah, the pandemic boosted that development too, like a couple of others. But that's a natural thing to happen to logistics because it's such a stable performer.
Okay.
Maybe to add, I really think it's the need for institutional for returns, right? So there are no alternatives for institutional investors to really deliver the returns investors are expecting, right? So I think the money which is pushing into the market, and also the perception that this asset class is maybe less special than maybe 10 years ago. This is something which really drives the yields downwards. And I mean, there are no alternatives, right? So if you buy office, the yields are even lower or similar. Retail, no chance to invest right now. It's at least not for institutional clients. Residential, yes, is something also yield compression. So they are really desperately looking for some sectors where they still can deliver the performance which has been promised to the investors. I think it's the money pushing the yield.
With this quantity of money seeking to get into the sector, what are you projecting even lower yields a year from now?
Who knows? Yeah? Maybe. We see a very strong demand from investor side, right? And we are looking for ways to buy cheaper. So we are stepping in earlier, or we are trying to find more special projects, as 𝗀𝗽𝗲𝗹 was saying, brownfield developments, which are maybe a little bit cheaper, but in principle, this will be a development we expect in the next 2 to 3 years.
I can agree only if I speak with all of my investors. They say to me, "Hey, yes, what can I do? I have only the chance if we handle this real estate class, retail, office, residential, logistic, or maybe hotellery. Yes, but what should I do? I'm not willing to spend more money on the retail market right now, maybe in a couple of years, but then one sector is away. Hotel, I don't know exactly today it's a good one to spend, and then you have to fight with the other sub-asset classes, and then there's a shift for example, from the retail to the logistic, residential, and what can they do? They have no other opportunities. Yes, for example, if they decide to look for another opportunity, renewables, for example, infrastructure, it is the same. Yes, a lot of money in the market, but that's why I think we see a lot of yield compression in the next couple of months and years.
We will see the asset class mature further, like other asset classes did before. I think that's the thing we witness right now. It's a process to maturity.
But for investors who are heavily invested, let's say in 2 or 3 other asset classes, does it make sense for them to be let's say looking at putting 5% of their assets into a sector that is as specialized as logistics and light industrial? Is that not increasing the risk of investors not simply knowing what they're doing, or does it not take a real deep focus on this one sector?
I think if I speak with my investors, they are all professionals on the market, and they know exactly that they have to combine different kind of asset classes. It's the same in the liquid market. It's the same with the alternative asset class. If I'm a board member of Versorgungseinrichtung, pension fund, insurance company, I have to cover the risks. And what can I do to cover the risk? I spend money, maybe 5%, maybe 10% in different asset classes to avoid that all my money lays in one asset class and to have a good yield risk profile. And that's the old theory. You can find it in a liquid market. You will find it in the alternative asset class. I don't think so that it is a big risk for them, because altogether, if they combine different kind of asset class, in the end, they have a better risk yield profile.
Yeah, I agree. And I think investors who before have had a lot of exposure in, for example, retail or hotels would have loved to have 5% of their portfolio in logistics in March 2020. So I agree with Björn. I'm also talking to professional investors. They know what they're doing. Nevertheless, we as a company, we're just asking ourselves the question, if you buy a large modern distribution facility further out, in an area which is far from the main, where the people live at 30 times the rent, with technology still changing, with the supply chain still, changing to a certain extent.
And a 10-year contract.
Yeah. So after 10 years, what do you do? Obviously, you can be lucky the tenant stays. Technology doesn't evolve too much, and it's still very generic. Obviously, you can build in flexibility. There are lots of things to mitigate the risk, and I'm sure everybody is doing that. But from our perspective, the whole logistics landscape also offers other type of products at other types of yields, with probably more possibilities to work on the assets. We've talked about brownfields, that may offer more value. I find the part of the question, how much is related to expected rental growth. That's a very interesting one, because historically logistics and industrial have not seen strong rental growth. I think that even nominal rents have not kept up with inflation very often. And what has changed now? What has changed in the landscape, which might make us believe that rental growth will happen? We think rental growth will happen, but at very specific locations, and that's what we've already seen over the last years around the large metropoles like London and Paris, for example. So it will happen, but it will happen at very specific locations, I guess.
Well, in Germany, it pretty much happened already over the last couple of years across the board. To different extent, obviously. In certain areas far more than others, but rental growth in logistics is a fact. There is also supporting trends, also as a consequence of the pandemic, even though we shouldn't overestimate that. I still have some memory of the 9/11 crisis. I was still a manager in the American-based logistics company back then, and there was a big discussion about buffer stock as a consequence of having made the experience of suddenly closed borders and this kind of thing. Now we have the same discussion again, nearshoring, reshoring. All these phrases are flying around again. Do we believe that this will have a lasting effect? Yes, on certain industries where we will see more buffer stock. We see some reshoring even. Not a big effect, but a small and lasting effect as a consequence of the pandemic is supporting the overall trend of growing of rental growth
and perhaps a political one of generally preferring to have supply and suppliers closer to home rather than on the far side of the world.
Yeah, exactly. But we have to be realistic. This will be limited to certain critical industries. This is not true across the board. Cheap T-shirts and clothing and other consumer goods. There's no point in reshoring or nearshoring production of these products because consumers are attracted by cheap prices. I don't expect that to change. But in certain industries like pharmaceuticals and certain mechanical production items, it will certainly happen.
Charles, got a couple of questions here, which I'd like to ask because I'll keep an eye on time. One from 𝗀𝗲𝗹𝗶. Do you see a certain competition emerging between investors who would look into older buildings for investment and developers who would be interested in the same property to make it a brownfield development, i.e. demolish the existing building and erect a new one? He says to him it seems that developers are more prepared to pay higher prices for lucrative properties and less reluctant to be involved in brownfield developments. Is that one for Jan?
Who would like to take that?
Well, yes, to a certain extent, this is an assumption which is absolutely holds true. As developers, if you have an aging building, you often have not so strong tenants in there. The rents are sort of mediocre as well. And this is something where a developer can really jump in, pay asking price or even above higher prices than somebody who tries to hold on to this investment for 10 years or so. Yes, definitely. In this market situation, yes, absolutely.
Okay. Another question, perhaps one for Bjorn to start with, is what's the panel's general view on Portugal's potential for the sector in mid-term, 5 to 8 years? And perhaps if the other panelists can comment on other areas which they see potential in out of the core logistics areas in Europe.
No, I think I should imagine it could be a good question for my other panelists. I don't know maybe CEO or Hendrik could help me to support this question. I have not a really good answer to it right now. Yeah.
I think there is a potential, but it's a limited potential. Yeah. It's a small market. You have few. The local population is not as big. There are not that many industrial areas as well. Lisbon as a port, yeah, it's a port, but it's not, one of the
on the main access routes through Europe.
Remotely important ports of Europe. So there is a potential, yes. Small market for e-commerce and general logistics, but it's not a big market.
And on that note, I mean, with Central and Eastern Europe is also becoming a serious market, also for foreign investment flows. Does all of this mean ultimately that Germany stands to disproportionately benefit from more logistics and more light industrial? As trade flows across Europe also expand?
Probably is already.
So for investors, Germany is likely to disproportionately outperform as it has done in the last 3 or 4 years.
Well, you know what, in other decades, back some 50, 60 or more years, might have been a problem being right in the heart of Europe with borders with many countries around us. Nowadays is certainly one of the forties for logistics. Why? Because it's a transit country, it's a hub country, it's whatever. And the more the Eastern European countries are growing their economies and the
manufacturing
income is growing, manufacturing is growing, because many of these countries have a strong industrial tradition, like the Czech Republic and so on. Used to be industrial heartland of Europe.
Very much so.
And now with the new Silk Road, getting access even to near Middle East and Far East, far cheaper and easier than it's and hopefully one day more dependable than the ocean routes. That's very promising in the long run.
Yeah. Good. Andrew, we're running out of time. I think we don't want to run too far over. Anything else? Any other questions there coming in?
Well, I've got one more perhaps, that many institutional investors have added logistics properties to stabilise portfolios during the current logistics hype. How do you view the fact that non-experts are now also becoming active here, and what does this mean for the price trend?
We kind of covered that one a little bit with the mission question there about 5%, 6%, and so on. And I think both Theo and Bjorn swiped it away more or less, saying that most of their investors are international, are experienced enough not to fall into the trap. And if they're adding a little bit of logistics to their portfolio to stabilize it, I mean, they are adults, I presume. Theo, you were quite strong on that in your statement earlier.
Yeah, I think they're adults, but at the same time, the weight of money, as Björn also pointed out, is determining where the market goes, and the question, that's what I tried to say when I said the jury is still out. What it means in 10 years' time, if you've paid 30 times the rent, but it's definitely diversification to a portfolio of standing investments. We've seen that over the pandemic. So going forward, I think investors will continue to appreciate the sector, even if it has become more expensive. And I guess they know what they're doing. I often talk to clients, and they sometimes know more about the market than myself, but they don't have the local teams, so they're professional.
Yes, I only to add one sentence there. If I speak with the investors, they say I give them the advice. Do you understand the market? And I think the most of the institutional clients will understand exactly the market, or need a little bit longer to decide what they will invest in. But I see that they are very good informed, very well informed, and they know exactly. And that's, for example, one thing, they will understand the project or the product. And for example, that's why we decided not to have such a specialized logistics center, for example, because they know that what will happen in 10 years if you have a very specialized product there, maybe the chance is a little bit lower that you can use it for another 10. And that's why they ask for one thing, one logistic, for example, product, what, for example, could be used for another tenant in 10 years as well. Make it not so complicated. Yeah.
I hope that turns out to be true. Anyway, I think, Andrew, we ought to wrap it up. It's 6:20.
Yeah,
and
we've overrun
unless
again.
there's anything else any of our panelists would like to say, I would like to thank all four of you, including Christian Freundl. I'd like to thank you all very much indeed. Most informative, and a lot of interesting subjects raised there. I mean, not answers naturally to everything, but it's the major asset class at the moment. It's attracting most of the attention, and it's one of the strongest and one of the most robust. So I've no doubt, and I just can only hope that in a year's time, if we're still talking, which we will, of course, be talking about industrial and logistics, that I hope we won't be talking about it with any hint of the pandemic surrounding us. So thank you all, four of you, very much indeed for a very interesting, very good, worthwhile discussion. And I'll hand back to you now, Andrew, to wrap up.
Yes, thank you, Charles. Could I also extend my thanks to the panellists and to Christian for the excellent introduction earlier. Could I also say thank you to everyone in the audience. We look forward to seeing you again on the 20th of October when our next Investing in Germany Roundtable will be examining the office market. So until then, please stay safe, and I would wish everyone a good afternoon, good evening.
Good evening.
Thank you very much.
Bye.
Thank you indeed.
Thank you.
Bye-bye.
Bye-bye.